What are the fallacies of tax deduction?
That it's a complete myth. It's all smoke and mirrors. Math-wise, it doesn't work out. To prove it, we're gonna have to take a look at some math on paper. So let's go over to the whiteboard so we can write this out and we can show everybody that this whole tax deduction is a myth, and it only works if you end up being in a much lower tax bracket in retirement. Okay, let's say that somebody was saving $1,000 a month over the course of 30 years and they got an 8% average rate of return. When they were 65 years old, they'd have $1.3 million. Now on the distribution, we're gonna take a look at the 4% rule. So that's gonna distribute $54,376. That's fully taxable income. Let's say that they're in the 25% tax bracket upon distribution. So that's gonna leave them with $40,782 net. Now person B is gonna pay his 25% taxes up front, and so there's this big fallacy that because you're investing quote unquote extra money, you're gonna end up with much more in retirement. So $750 a month over the 30-year period at the same compounded annual rate of 8%, you're gonna end up with $1 million. So on paper, it looks like you do have way more money when you take the tax deduction, but that again is just smoke and mirrors. We need to take a look at the distribution. Let's check out how that works. Now we're gonna take that smaller nest egg of $1 million, we're gonna look at the same 4% safe withdrawal rule, but the distributions are tax-free, so guess what? Your net amount is exactly the same. Your smoke and mirrors tax deduction did absolutely nothing for you. Remember that the only way that a tax deduction makes sense is that if you're relatively sure that you're gonna be in a lower tax bracket in retirement. And if you plan on being successful in building a large nest egg, I wouldn't count on it. And in addition to that, where do you think the tax structure in general is going to be in the future? Is it gonna be higher or is it gonna be lower? Then stop and think about how much is our country in debt? $32 trillion. How's Social Security and Medicare going? Oh, they're both underfunded to the tune of trillions of dollars. And in fact, Medicare is projected to become insolvent in 3 years. Social Security is projected to become insolvent in 10 years. Where are they going to get the money to fix these programs? Oh, you got it right, increased tax revenue. And they can't tax the people who don't have any money or who don't make any money. But if you've got all this money in your 401k and it's pre-tax, guess what? I fear that they're coming after you. You would like to avoid this potential problem, comment the phrase tax-free down below. We'll reach out to you to book a complimentary Zoom call so you can learn about setting up a tax-free retirement.